In the dynamic and often unpredictable world of cryptocurrency markets, Bitcoin's steadfast hold near the $64,000 level despite recent volatility and external pressures has emerged as a focal point for traders and analysts, prompting serious consideration of whether the bulls are methodically positioning themselves for a substantial upward move that could reshape sentiment across the entire digital asset ecosystem in the weeks and months ahead. Welcome to Crypto Hub, your reliable source for in-depth and balanced cryptocurrency news and market analysis, delivered with a commitment to clarity and factual reporting. Today we are taking a close professional look at Bitcoin's current price action as it maintains stability around this key threshold, exploring the technical foundations, fundamental drivers, on-chain signals, macroeconomic influences, and shifting market sentiment that together inform the debate over the asset's near-term trajectory and what it could signal for broader crypto market participation. Bitcoin is currently trading in the vicinity of $63,800, with modest gains in the most recent 24-hour period, supported by trading volumes that have remained reasonably robust, around $19 to $20 billion daily, reflecting ongoing interest even as the market digests a period of consolidation following earlier highs. This positioning above 64,000 has taken on particular significance because it represents a confluence of psychological, technical, and historical importance, serving as both a former resistance zone during prior cycle advances and now a critical support floor that, if defended successfully, could prevent deeper corrective moves and lay the groundwork for renewed bullish momentum. Market participants have noted that holding this level comes after a notable retracement from higher points reached earlier in the year and in late 2025, when prices briefly approached or exceeded 74,000 before broader pressures, including heavy spot exchange-traded fund outflows, contributed to a pullback of roughly $25,000 in some measures of peak-to-trough decline. The resilience observed here occurs against a backdrop of mixed macroeconomic conditions and sector-specific developments that have tested risk appetite across traditional and digital markets alike. Recent decisions from the Federal Reserve to maintain interest rates while signaling potential caution on inflation trajectories have introduced headwinds for growth-sensitive assets, yet certain geopolitical developments such as reported progress toward de-escalation in international tensions have provided pockets of optimism that appear to have helped stabilize broader risk sentiment in recent sessions. Institutional flows through Bitcoin spot ETFs have experienced notable outflows in recent weeks, with large issuers reporting redemptions in the billions, yet the price has not broken decisively lower, suggesting that underlying demand from long-term holders, corporate treasuries, and other accumulation channels may be offsetting some of the selling pressure and contributing to the current equilibrium around the 64,000 mark. Technically, the daily and weekly charts reveal a market that is testing a well-defined support band between approximately $60,000 and $65,000, an area that has historically attracted buying interest during previous consolidation phases, and that aligns with several moving average convergences and Fibonacci retracement levels drawn from the broader advance that began after the 2024 halving event. Analysts tracking momentum indicators have pointed to early signs of bullish divergence in tools such as the Moving Average Convergence-Divergence histogram and the Relative Strength Index, where price has made lower lows while oscillators have not confirmed with equally weak readings, a pattern that in past cycles has sometimes preceded periods of stabilization or reversal when accompanied by rising volume or positive funding rate shifts in perpetual futures markets. Resistance overhead begins in earnest near 67,000, with subsequent hurdles at 70,000, 72,000, and higher zones that previously acted as supply areas. A sustained reclaim of these levels on increasing volume would strengthen the case for bulls to target a retest of prior cycle highs and potentially establish new all-time peaks later in the year. On-chain metrics provide additional layers of insight into the conviction behind the current hold, with data indicating that exchange reserves have continued a gradual decline trend in recent months, consistent with coins moving into self-custody wallets or long-term storage solutions rather than being prepared for immediate sale. Active address counts and transaction volumes have shown resilience rather than sharp deterioration, while large wallet or whale activity has included periods of accumulation during dips, echoing patterns observed in earlier market cycles where patient capital positioned itself ahead of eventual expansions. the post-halving supply dynamics continue to exert a structural tailwind, as the reduced issuance rate has created a slower flow of new coins into circulation, meaning that even moderate sustained demand can exert upward pressure on price once selling exhaustion sets in. These fundamental scarcity elements, combined with growing mainstream infrastructure such as improved custody solutions, payment rails, and Layer 2 scaling developments, underpin the argument that Bitcoin's core value proposition remains intact even during periods of price consolidation or correction. Market sentiment readings, drawn from a combination of social volume analysis, fear and greed indices, and derivatives positioning, currently reflect a cautious but not capitulatory environment, with many participants expressing a wait-and-see stance rather than outright panic. Futures funding rates have oscillated but avoided extreme negative territory that would signal aggressive short crowding, while options markets show significant open interest clustered around strikes near current levels and at higher upside targets, setting the stage for potential volatility around the large monthly expiration scheduled for late June. Traders are closely monitoring whether this expiration produces a gamma squeeze or simply resolves into continued range-bound behavior with implications for short-term directional conviction. Broader crypto market correlation remains high, meaning that altcoins across various sectors have largely mirrored Bitcoin's consolidation, though some higher beta names have exhibited greater downside volatility during the recent pullback, highlighting Bitcoin's relative strength as the market's primary liquidity and sentiment anchor. From a historical cycle perspective, Bitcoin's behavior around similar percentage drawdowns and support tests in prior bull markets after halving events has often featured extended basing periods before the next leg higher, driven by a combination of diminishing supply, increasing institutional participation, and eventual retail re-engagement once price stability is confirmed. The current environment includes unique variables, such as the maturation of the ETF product suite, which has introduced new flows and also new redemption dynamics, as well as evolving regulatory clarity in several major jurisdictions that could either facilitate or constrain capital allocation depending on forthcoming policy developments. Corporate adoption narratives, exemplified by ongoing treasury allocations from public companies and the continued advocacy from figures emphasizing Bitcoin's role as a treasury reserve asset, provide a steady bid that differentiates this cycle from earlier retail-dominated phases. These elements collectively support the view held by some market observers that the present consolidation around 64,000 may represent an accumulation zone rather than the beginning of a prolonged bear market, although confirmation would require sustained defensive support coupled with improving fundamental inflows. It is equally important to acknowledge the risks and alternative scenarios that could unfold if the current hold proves temporary. A decisive break below the $60,000 to $61,000 support cluster, particularly on expanding volume or negative news catalysts, could accelerate selling toward 55,000 or lower zones where additional technical supports reside, potentially triggering further liquidations in leveraged positions and testing the resolve of even long-term holders. Factors that could precipitate such a move include stronger than expected inflation data, leading to more hawkish central bank rhetoric, renewed geopolitical flare-ups that increase safe haven demand for traditional assets at the expense of risk markets, or additional waves of ETF redemptions if institutional sentiment sours further. The absence of clear capitulation signals in on-chain data has led some bearish analysts to argue that the market has not yet reached a durable bottom, suggesting that deeper price discovery may still be required before a sustainable recovery can take hold. Volatility remains an inherent feature, and participants are reminded that rapid swings in either direction can occur without warning, underscoring the need for disciplined position sizing and risk management regardless of directional bias. Looking ahead, several potential catalysts could influence whether the bulls successfully translate the current stability into the next significant upward move. Upcoming economic data releases, including employment figures, consumer price readings, and central bank communications, will continue to shape the macro backdrop for risk assets. Developments in the regulatory sphere, such as progress on market structure legislation or enforcement actions, could either bolster confidence through greater clarity or introduce short-term uncertainty. Corporate earnings seasons and any announcements regarding further balance sheet allocations to Bitcoin by public entities may serve as sentiment tailwinds, while technical breakouts above key resistance levels accompanied by volume expansion would provide the clearest near-term confirmation of bullish control. In the derivative space, the resolution of the upcoming options expiration and subsequent positioning adjustments could either fuel a short squeeze if bullish bets dominate or extend consolidation if hedging activity increases. Longer-term structural drivers, including continued ETF adoption curves, potential nation-state or sovereign wealth interest, and the ongoing maturation of Bitcoin's ecosystem through improved scalability and usability, remain supportive of higher valuations over multi-year horizons, even if near-term price action stays choppy. For the broader cryptocurrency market, Bitcoin's ability to hold and eventually advance from current levels would likely have positive spillover effects, potentially unlocking capital rotation into altcoins and fostering conditions for sector-specific rallies in areas such as decentralized finance, infrastructure plays, and emerging applications in tokenization or artificial intelligence integration. Conversely, prolonged weakness in Bitcoin would probably keep the entire market in a defensive posture, delaying altcoin season dynamics and forcing projects to demonstrate clear utility and revenue generation to attract scarce capital. Market participants are therefore watching the 64,000 zone not merely as a Bitcoin-specific level, but as a barometer for overall crypto market health and the readiness of bulls to drive the next major expansion phase. In synthesizing these elements, the picture that emerges is one of a market at an inflection point where resilience at a key technical and psychological level coexists with legitimate questions about the durability of the current equilibrium. Bulls appear to be preparing through quiet accumulation, patience with macro headwinds, and focus on long-term scarcity narratives, yet they must still overcome overhead supply and prove that demand can absorb ongoing distribution from various sources. The coming sessions and weeks will likely provide clearer signals through price behavior around support and resistance, flow data from investment products, and on-chain confirmation of holder conviction. While the ultimate direction remains uncertain and subject to rapid change based on new information, the current hold near 64,000 keeps the door open for a constructive resolution in which Bitcoin reasserts its leadership role and sets the stage for the next chapter of growth across the cryptocurrency landscape. This analysis from CryptoHub has aimed to present a comprehensive, evidence-based overview of the factors at play without speculation or undue optimism, recognizing that cryptocurrency markets carry substantial risks and that past performance offers no guarantee of future results. Viewers are strongly encouraged to conduct their own thorough research, consider their individual financial circumstances, and consult qualified professionals before making any investment decisions, as the information shared here is for educational and informational purposes only and does not constitute financial, investment, or trading advice. Market conditions can shift quickly, and staying informed through multiple reputable sources remains essential for navigating this space responsibly. Thank you for joining us on CryptoHub for this detailed examination of Bitcoin's position and the questions surrounding the potential for the next significant move in crypto markets. If you found this update valuable, please consider subscribing to the channel, enabling notifications, and engaging with the content by sharing your thoughts in the comments section below, as community discussion helps enrich our collective understanding. Stay tuned for ongoing coverage of price developments, on-chain trends, regulatory updates, and macroeconomic intersections that shape the digital asset world. Until the next analysis, remain vigilant, stay educated, and continue following CryptoHub for professional perspectives on the ever-changing cryptocurrency landscape.